Hello, welcome to Simple Finance Bytes. I'm Ernest, and this podcast is my letter to my younger self about money, the practical strategies I wish someone had taught me when I was starting out. We focus on simple finance because simple is what actually works. Your brain can handle simple systems, but your brain struggles with complex ones. The financial industry profits from complexity, but we're going in the opposite direction. Psychology first strategies that work with how you actually think and behave. Accelerate your path to financial independence, and protect what you build along the way. Before we jump in, if these episodes are helping you, the best way to support the show is by subscribing and leaving us a review on Apple Podcasts, Spotify, YouTube Podcasts, or wherever you listen. Then, share it with someone who needs to hear this content. It really does make a difference. Also, connect with us on social media. We're on Instagram, Threads, and Facebook, and we'll be expanding to some other platforms here in the not-too-distant future. All the links are in the podcast description, show notes, and our website at simplefinancebytes.com. So if you need to reference anything we talk about in this episode, you can find the notes there and the links. If you want to stay connected with our simple approach to money, make sure you're signed up for our free newsletter at simplefinancebytes.com. Each month, I share exclusive behavioral insights and deeper analysis that builds on the podcast episodes. Plus, I call out financial industry tactics that don't make it into the show. Today, we're starting Module 6 of the Simple Finance System, Financial Protection. And I'm going to challenge the fear-based approach the industry uses to sell you security products you don't need while ignoring the simple measures that actually protect your wealth-building progress. Let me start with something that might surprise you. The biggest threat to your financial security isn't hackers or identity thieves. It's security paralysis. That's becoming so overwhelmed by protection advice that you do nothing at all. Think of it as a deer in the headlight response. Here's what the financial media and the financial industry wants you to do. They want you to freeze your credit at all three bureaus. They want you to pay for services on top of that freezing at all three credit bureaus. Use different passwords for every account. Enable two-factor authentication everywhere. Monitor your credit daily. Buy identity theft insurance. Get an umbrella liability insurance. Set up fraud alerts. Use a VPN for everything. And then offer you a ton of other subscriptions to protect yourself from a cybersecurity perspective. The list literally goes on and on. Sound exhausting? That's because it is. This approach creates what psychologists call decision fatigue. When you're overwhelmed by security choices, your brain shuts down and you end up less protected than when you started. You basically do nothing. You give up. But here's the financial independence angle most people miss. While you're paralyzed by security overwhelm, you're not building wealth. Every month you spend researching the perfect security setup instead of investing. Every dollar you spend on unnecessary protection products instead of your future index funds. Every hour you spend managing complex security systems instead of optimizing your income. That's all time and money that could be accelerating your path to financial freedom. The industry profits from this paralysis in two ways. They want you to feel scared and confused, so you'll buy their premium monitoring services, their insurance products, their security software. But they also benefit when your security fears keep you from taking wealth-building risks like investing in the market or starting that side business. Here's the truth. 90% of financial protection comes from 10% of the actions they recommend. Let me repeat that again. 90% of financial protection comes from 10% of the actions they recommend. Today, I'm going to give you that crucial 10%, the simple measures that actually prevent fraud without turning financial security into a part-time job that steals from your wealth-building time. Let's talk about what really matters for protecting your financial independence journey. 3 security measures that prevent the vast majority of financial fraud while keeping you focused on wealth building. First, strong, unique passwords for your bank and investment accounts. Not every account you have out there of every kind, right? Not one for your Etsy store or whatever the case it is. Just for your money accounts. Now, obviously, I'm going to suggest you do have it for every single account, but this podcast is talking about finance and simple finance. So we're just talking about your money accounts. So make sure you have strong, unique passwords for your bank and investment accounts. And what that means is that every account has a different password. You do not reuse passwords. Now you might be thinking, how am I going to remember all these different passwords? Use a password manager. Now here's the thing. iOS, which is with Apple and Apple devices, Android has the same thing. They have password managers built in. And what these do is they store the passwords so you don't have to remember them, and they store them securely, often behind biometric authentication. So what that means is you can have a different password for every one of your accounts, and the password manager will remember everything. All you have to remember is how to get into the password manager. Again, if you are a macOS, iOS, Apple user, just use the passwords app. Same thing if you're Android, use the Android built-in password manager. If you're on Windows, I'm sorry. Having a unique password for every one of your accounts and using a password manager to manage it prevents about 60% of account takeovers. And here's why this matters for your financial independence journey. A compromised investment account doesn't just mean stolen money, it means stolen time. You could lose years of compound growth while you sort out the mess. Second, two-factor authentication on all banking accounts and any investment accounts. Not every app on your phone, just where your money actually lives. This prevents another 30% of fraud attempts, even if someone gets your password. From a wealth building perspective, this is your compound interest insurance. You're protecting the accounts that are actually growing your net worth. Third, monthly account reviews. In the information security and cybersecurity world, we call this validation and auditing, right? So monthly account reviews are very simple. You actually look at your statements from your bank, your credit union, and your investment accounts. Set a recurring calendar reminder, 30 minutes a month. That's literally all it takes, 30 minutes a month, maybe an hour if you're a little bit slower at it. An hour a month. Reviewing your accounts catches fraudulent transactions faster than any monitoring service does. And here's the bonus. This habit also keeps you aware of your progress towards financial independence and your spending. You're not just going to spot fraud, but you're going to spot spending creep, fee increases, and opportunities to actually optimize all of this. That's it. Those three actions provide more protection than a dozen security products combined while keeping your focus on what actually builds wealth. The industry doesn't want you to know this because they can't sell you a monthly subscription for doing things that are free and effective. If this resonates, but you want help implementing these systems in your specific situation, I do work with people through my one-on-one coaching. We'll talk more about that at the end of the episode. Now, the psychology here is crucial. Security that feels empowering gets maintained. It gets used. Security that feels overwhelming gets abandoned. It gets left by the wayside. People just ignore it. We're going for empowering protection that supports your wealth building psychology, not undermines it. Now, let's talk about a very annoying topic for me, and that is insurance. It is one of those that it is the lesser of two evils, but it's also the biggest source of financial protection confusion and the place where the industry makes the most money by scaring you and by lying to you. This is also where your financial independence timeline can get completely derailed if you're not careful. Here's what you actually need for your financial independence journey. Health insurance if you don't have it through work, because medical bankruptcy can wipe out decades of wealth building in one emergency. Car insurance if you drive, because liability claims can destroy your net worth. Homeowners or renters insurance, because losing your housing or getting sued by neighbors can devastate your financial progress. term life insurance if people depend on your income, because dying shouldn't destroy your family's financial independence progress. Let me dive into that last one. Term life insurance if people depend on your income. So understand what this is saying. What this is saying is if you are the main breadwinner of your house or the only person working, or even if both of you are working, you and your spouse, but you need both of your incomes to be able to survive, what term life insurance does is it says if you die, it pays out enough money to replace your income for a certain amount of time, which allows the surviving spouse or the surviving members of your family to be able to be okay in the event of your death. Life insurance is not about investing, or you can't invest in it. It's not about retirement. Whole life insurance, indexed universal life, all junk insurance products. You don't need any of those. You also don't need a life insurance policy on a baby. That's insane. The baby's not supporting the family. Life insurance is about replacing your income in the event you die so that your family is okay afterwards. That's the only point of life insurance. I just want to drill into that because I have seen a lot of these scams on social media lately of all kinds of random people pitching all kinds of life insurance products as retirement products or investing products. It's all garbage. That's the list. Notice something? Each of these protects against events that could cost you hundreds of thousands or derail your wealth building entirely. They are protection. They're not investments. Keep that clear. Here's what the industry wants to sell you: identity theft insurance, credit monitoring insurance, extended warranties on everything, umbrella policies for theoretical lawsuits, supplemental health insurance for specific diseases, travel insurance for every trip, indexed universal life, whole life insurance, and many other insurance products designed to make the insurance companies rich while they grease the palms of these agents with commissions from those junk products. The psychology of insurance sales is based on fear amplification. They present low probability but high emotion scenarios. What if someone steals your identity? What if you get sued? What if your phone breaks? And then they sell you peace of mind. Or on the other side with the indexed universal life and whole life insurance, they'll talk about building wealth and being able to pull money out and guaranteed amounts versus why would you put your money in the market and potentially lose it? That's the key right there. Potentially lose it. The insurance company that they're selling the policy from can go under any day, and you could potentially lose that too. But they don't talk about that part, right? They just talk about how the stock market goes up and down. You don't actually lose money unless you sell your stocks. They don't talk about that either. Why? Because none of these individuals are actually registered investment advisors or certified financial planners. They're insurance salespeople masquerading as investment advisors. Always ask them, are you an RIA, a CFP, or a CFA? Are you certified? Are you a fiduciary? And will you put that in writing that what you are selling me is actually in my fiduciary interest? None of them will do that. Very simple way to figure it out. But here's the thing. Even after they sell you that peace of mind, here's what they don't tell you about the financial independence cost, because they actually don't know this part. They couldn't tell you, but here it is. If you're spending $200 to $500 a month on unnecessary insurance products, that's $2,400 to $6,000 per year that could be invested instead. Over 20 years, that's potentially $100,000 to $300,000 in lost compound growth. They're literally selling you products that delay your financial independence by years. And I use the low range of that, $200 to $500. I have seen these people hawking this junk online for $1,000 a month. Just imagine, you're talking nearly $600,000 or more in lost money by buying one of these junk products. Real financial protection means having the insurance that covers actual wealth-destroying risks, not every possible inconvenience some marketing department can imagine. If losing your phone wouldn't meaningfully hurt your finances, phone insurance delays your financial independence date. You can buy phones cheap on the secondhand market when yours dies. It's not an emergency. If a medical emergency could bankrupt you, Health insurance accelerates your financial independence security. That's something you actually need. So, since we're Simple Finance Bytes, here's my simple financial protection framework. 3 levels that build on each other without creating overwhelm or derailing your wealth building. Level 1 is what I call the basic security foundation. This is a non-negotiable for anyone serious about financial independence. Strong passwords for money accounts. 2-factor authentication on all financial accounts. Credit unions, banks, investment accounts, right? Fidelity, Vanguard, Schwab, doesn't matter, Robinhood. 2-factor authentication on everything, including your email accounts. Why? Because your email account is often used as something to log into your financial accounts, and it's also where you receive alerts and sometimes 2-factor authentication things. So your email account needs to be secure as well. So 2-factor authentication on everything if possible. Freeze your credit at all 3 major credit bureaus. This prevents new account fraud that could tank your credit score and increase your borrowing costs. One thing I want to point out here is this is free to do. When you go to all 3 of their websites, they make it very hard for you to find the area where you are allowed to freeze your credit for free. They try to sell you things called credit lock and all these other kind of things. Never pay for this. This is free and it's guaranteed by law. Freeze your credit at all 3 major bureaus. Again, it's free and it's by law. If you need help figuring this out, again, I do one-on-one coaching sessions. I'm happy to help you figure this out and set it up properly. Monthly statement reviews. Make sure you're looking at your statements every single month for anything that looks odd. And lastly, basic insurance coverage for real wealth risks, as we mentioned earlier, health insurance, term life insurance, etc., etc. This level 1, with these items I just covered, protects you from 90% of financial threats while requiring minimal time and money that could otherwise go toward investing. For most people, for 98, 99% of people, this is enough. So if you are on the Simple Finance train, just level 1 is enough. However, if you want to take it to the next level, level 2 is what I call enhanced protection. So once level 1 feels automatic, you can add, as we mentioned, a password manager for all of your accounts, not just the financial ones. I would highly recommend this. I use several myself, but a password manager makes it so much easier to have unique passwords on all of your accounts. Just use it. Again, Apple, Android have them built in. Windows has its own. We can help you figure this out if you need it, but use a password manager, please. Another thing you can do for enhanced protection is quarterly credit report checks. Staying on top of your credit helps you qualify for the best rates on any debt you use strategically, like a mortgage. You should check your credit report at least quarterly. What's great about this is that a lot of credit unions and banks actually include free credit reporting inside their own apps. So for example, I know Capital One does this, and 2 of my local credit unions do it. Navy Federal Credit Union does it. They actually put a credit score. They don't put the report, but they put the score inside of their app. So while that may not be the full report, you can at least see where your score is and you can look at it from month to month or quarter to quarter. If you see a drastic change, you know that something's wrong and you can go figure out what happened. But if you don't have that for free in one of your credit union or banking apps, you can still log into the 3 credit bureaus every quarter for free, again, and look at all of your credit reports just to make sure everything there is correct. Anything you find that's incorrect, immediately dispute it with the credit report agency. Now, this gets you to about 97% protection while still keeping your costs low and your time focused on wealth building. This is an area where I would say this is a nice to have, right? And I would also say that the password manager is becoming a must have. Not quite there yet, but it will. But 97% is good for just about everybody. However, there is another level, level 3, which I call advanced security. Now, this is where you have significant assets or specific risk factors. Think, for example, You need additional insurance coverage based on your actual net worth. So imagine that you are a Hollywood movie star. I would love if some of you were listening to my podcast. I doubt you are, but if you are at level 3 advanced security. You need additional coverage based on your actual net worth. You need professional security reviews that are looking at all of the cybersecurity for all of your personal things like email, banking accounts, and anything else, really. Most people never need level 3. And honestly, if you're at level 3 wealth, you're probably already financially independent and can afford professional help. However, we offer that as part of our one-on-one coaching sessions as well. The key is completing each level before moving to the next. Psychology research shows that people who try to implement everything at once, or what we call boil the ocean, abandon everything within weeks. They just give up. It's too much. It's not practical. It's not attainable. People who build security habits gradually maintain them for years while staying focused on their primary goal, in our case, building wealth. So, start with level 1, make it feel normal and automatic. Then decide if level 2 makes sense for your situation. I would at least recommend the password manager from level 2, but again, decide if it makes sense for your situation. Most people find that level 1 gives them both actual security and peace of mind without the complexity that breeds abandonment or the costs that delay financial independence, right? So wherever you fall on the spectrum, just start at level 1 and try to get to level 2. Level 3, again, is not really for most people. I just put it there because it does apply to some people, and I want to make sure that they get covered as well. Let me give you the key takeaway from today. Financial protection should accelerate your path to financial independence, not delay it. If your security measures are costing you significant money or mental energy, they're working against you. They're working against your wealth building goals. The financial industry profits from your fear and confusion. They want you to feel like threats are everywhere and only their products can save you. But the truth is that simple, consistent security habits protect you better than complex systems you won't maintain, and they do it without stealing from your investment timeline. Next week, we're continuing Module 6 with a deep dive into the specific security habits that actually stick, because knowing what to do is only half the battle. We need to talk about the psychology of making security feel automatic instead of overwhelming, so you can get back to the real work of building wealth. Thanks for hanging out with me today on Simple Finance Bytes. But before we wrap up, quick security reminder that applies to everything we've discussed today. Enable two-factor authentication on your email and banking accounts right now. It's the simplest way to protect the financial progress you're making. Your future financially independent self will thank you for this 5-minute investment in security. And a quick note, this is all financial education. This is not financial advice, so please see the full disclaimer in the show notes before making any financial decisions. If this episode changed how you think about financial protection, subscribe and leave us a review on Apple Podcasts, Spotify Podcasts, YouTube Podcasts, or wherever you listen. Then share it with someone who needs to hear this content. For more insights on simple finance and building real wealth, head to simplefinancebytes.com. And if you want the deeper psychology behind these episodes, plus your free Simple Finance System blueprint, join our monthly newsletter. It goes out on the first of every month. You can connect with us on Instagram, Threads, and Facebook. All the links are in the show notes. Until next time, keep it simple, stay focused, and take control of your financial future.